Okay, guys, so we have been on a very serious journey, and today is the day 11 of this 22 days YouTube mentorship. All right, so today we're going to just be talking about a very simple pattern that I have used over the years, and I think this is one of the easiest trading systems that you can ever use, right? And I think it's something that you would be very excited to see. All right, something you'll be very excited to see. All right, today's session is going to be very brief because there's no much nut and bolts to this one, right? So we call this the ICT optimal trade entry, right? So we call it ICT OTE. Very simple and yet effective trading system, right? So the ICT OTE is one of my biggest arsenals. Is this particular trading strategy you can choose to trade it alone, right? You can trade it alone without trading any other thing, right? You don't need other blocks here. You don't need breakers. You don't need all those things here, right? All you're using is for the ICT OTE. So what is the ICT OTE? So when you're talking about ICT OTE, the first thing that should come to your mind is what? Fib levels. So there are three basic things we use in the ICT OTE. We use what? Fib levels, and then we use what? Structure. These are the three things that we use when it comes to ICT OTE. We use fib levels, we use structure, and what? We use what? Liquidity. These are the three things that are very important in this. So if you have a good understanding of structure and liquidity, then fib levels is just what? For the entries, right? So for you to excel with the ICT OTE, you have to have a good understanding of what structure and liquidity, right? So now, when we are referring to ICT OTE, we're basically using what our Fibonacci tool. So this is my fib tool now. So the levels which we pay attention to are the 62% level, 62 towards 79. Right? These are the levels we pay attention to on the fib level. So once you bring your fib level, you simply do what? Customize the way I have. You can see the 50 level, which is what equilibrium. You can see the 62% level, which is what the ICOT, and you can see what 79. So 62 and 79 are the major levels of the ICOT. That means most times price reject at 62 or 69. So, but to avoid missing out on trades, right, we usually go what? Put our entry at what is 62%, right? So this system is very simple. How do you trade it? You simply place your Fibonacci tool. If you're, let's just have an analogy now. Right, this is going to be a very brief teaching. No wasting of time. Just straight to the point. So now, what do we have here? If we are bullish, right, maybe we take our liquidity and then we are bullish, right? So we have this bullish break of structure here. Market, shifted at bullish by closing above this side. So that was a bullish break of structure, right? So now, what do we mean when we want to use OT? It simply means that okay, we have a bullish structure now, and we have to have some kind of liquidity. Let's assume maybe there's some kind of Asian liquidity above here. Maybe there's some kind of Asian range here. Something like an Asian range at this top here, right? Some kind of Asian liquidity that price is coming from, right? So price is coming from this, sorry. So price is coming from that Asian liquidity that has not been captured, right? Maybe, you have your Asian liquidity at that point there, and then, let's say that this is the Asian high. We'll have our Asian high somewhere around there. We have our Asian liquidity here, right? So market is, we have number one, we have our structure in place. Market is bullish. We have liquidity targets up here, which is what Asian high. So now we have what a shift of market structure by markets closing above what this previous high. So how do we play this? Very simple. This is the most straightforward trading system that you can ever come across. Very simple. No, there's no much nut and bolts. Just understand, is the market bullish or bearish? Where is the opposing liquidity? And then you bring out your Fibonacci tool. So you simply what? You plot a fib tool from here and you take it out to the high here. So where's your entry? Your entry is what? You simply place your buy limit at what? The 62% level. Very simple. Your buy limit should be here. Right, so your buy limit should be up there. And obviously, you're targeting what? This minus 0.27. So it's usually roughly, the ICOT is always roughly a 0. Usually a roughly 0.1:2 RR. That's usually the rough estimates. So it's a rough 1:2 RR. That's what it usually is. So you can see it's a very rough 1:2. It's a very 1:2.1 or 2.2 RR. It's a very simple strategy. So you can simply take here as your profit. That is where your fee your target should be. So how do you put in minus 0.27? You simply click on this. You click on settings button. Then you come on coordinates, right? So style. So you just simply put it in. So you put in the 0 level. You can take a screenshot of this. You put in the 50% level. You put in the 79. You put in the 62. You put in the number 1. And then what the minus 0.7. So this is your first profit target. And of course, you can add other ones. You can put minus 0.5, right? You can add minus 1.5 too. If you want to have longer targets, maybe if you have longer targets. So ideally, you can have a longer target. So you can put minus 0.27, then minus 0.5, and then minus 1.5. Right? These are all profit target as well, right? So basically, it's up to you. So you can maybe as market comes here, you maybe take partials here, and then hold for 0 minus 0.5, you take another partials, and then you can now hold for the overall minus 1.5, right? That is another fee target level, right? You can target minus 1.5 as what overall target, right? It's very simple. You can also use this for your profit target, minus 0.27, minus 0.5, and then what? These are profit target levels, right? They are profit target levels. But for me, I don't like extending so much. I just simply like to stick with the 1:2, which is at so I don't really like to go for much. Right? I just like to target the minus 0.27. I'm done. Right? I don't like targeting so much. Unless maybe the market gives me an indication that price can still run higher. Right? Let us just check the IR of okay, let me just include minus 0.5 here and see what the IR is going to be. Let's check on minus 0.5 and check what the IR is supposed to be if we target minus 0.5. Right, let's see IR on minus 0.5. So from here to minus 0.5. Okay, so everyone is a 2.7 RR. So you can see, you can still target that as well if you wish. So you can maybe choose to be using this. So it's usually a minus 1 is to 2.67 RR. Right, 1 is to 2.6.7 RR. So it's still a nice one. So you can choose that to be your profit target as well. But ideally, our first profit target is what? Always here at the minus 0.27. Right. And then since you can see Asian liquidity here, right? Since you can find Asian liquidity at this point, remember, fib levels are just for what your entries, right? You have to also consider structure, right? So since that you can see that Asian liquidity is already here, there's no point putting your TPA. You cannot simply move your TPA just up a bit, just a bit above, maybe just at the top of the Asian high there, just somewhere around there. You can put it here, right? This now becomes a 1:2.4 RR, 49 RR, right? Approximately 2.5 RR. So you can see how this thing happens. So minus 0.27 is usually the first area you will set a reaction of, and then you target what if there's liquidity points around there, you can still extend it to that point, right? So it's very, very simple. This is for a bullish scenario. Very simple. There's not too much not and both. Very, very simple. Simple as the word simple. No, not too much things to do here. All right. Now for a bearish scenario, how do we look at a bearish scenario? That means possibly we have some kind of liquidity resting down here, right? And then price goes bullish, and then you see a kind of market structure break here. All right. So now we have a market structure break. Now we have for this relatively equal lows here. This is liquidity, which we have here. So have this liquidity resting there, and then have what a bearish break of structure, right? So have that bearish break of structure, right? So with this is the bearish break. Price closed below this low. So now what do? Right, we have what number one, structure is bearish. Okay, we have liquidity here. Okay, next thing is what the fib levels. So that's how you do it. So the real checklist should be let me arrange it the way it should be. So it should be supposed to be structure. You look at the structure first. So let us do this the right way. So structure first, liquidity before what fib levels. So very, very easy. Call it SLB. So you can also call it your SLB level, your SLB trading pattern. Very simple. No much note and both on this. Very simple. All right. So structure, liquidity, fib level. That is all. That is how to trade OCT, ICT. So price comes here. What do you see? Break of structure. Now what do you do? Simply do what? Plot your fib to simply do what? Draw from this high down to the low, right? So now you have where will you enter? You enter your trade where at the 62%. So simply do what? Move your sell limit and place it where at the 62% limit, 60% level. Then your stop loss should always be above the number one. Stop should be above here. Just maybe a few pips above that for 100% retracement. And then you cannot extend lower. Cannot extend lower. So obviously you can see that this is a very, very very short one. So 1:2. So let me bring this down a bit. So you can target this as a 1:2 first TP. Then remember that you can take partial at this minus 0.27, and then overall you can target here as your overall take profit. You can take partials here and then target here as your overall take. This time becomes what? 1 to 3.28. Remember, the fib levels are just for entries and your profit projection. You have to also consider what the structure. So this is the overall liquidity low here. So you can just target this as overall take profit. First TP here, and then overall take profit at this point here. That is very, very simple. First take profit at this point here, or the overall TP at this point here. Or you can go break even. One price hits here, you go break even. Like you move your stop loss towards your entry. So your stop loss now become your stop loss moves to the entry, and then you expect price to do what, to come lower. So that's another way. Either you go take partials here. There are two ways to protect your positions. Right? There are two ways to protect the positions. Number one, you move your stop loss to your entry. That means you're not taking any partials. You want to take your full profit. So you want to take your full 1 to 3.8. Remember. So remember what you're doing. You want to make your full 1 to 3.8 IR. You don't want to reduce your profit. So you can simply do what? Remove your S out of your entry. So even if it takes you out, you didn't lose anything. So your position is still what? Protected. Now the second way to also protect position is by doing what? By taking partials. So as market comes here, you close some positions, like you reduce your lot size and take some profit, and then now hold for the overall what? TPA. Right? So you can either close some profit off, or you move your asset to the entry to protect your position. So that is how to protect your position. So your winning trade does not end the loss. So it's either you move your stop loss to your entry, or you close some profit and then allow the rest to run, right? So that is how to do it. So that's basically how this thing is done, right? You have to always consider liquidity, right? Remember, I've taught you guys the kinds of liquidity. All kinds of liquidity function here, either equal lows, either trend liquidity, whether session liquidity, which I will not go into details again. So any kind of liquidity works for this, right? So now let's look at real chart. And I caught one trade on this yesterday, right? So you guys could see the trade I caught on my Telegram community. So I think it was on German 30. That was the trade. It was on J30. It was on German 30. Yeah, I think it's this. German 30. No, that one. Let me just use my main charts to show you guys the trade. It's a very beautiful one. It was on German 40. Let's bring in charts now. It's on German 40. So German 30, sorry. That was the trade. I think this was it here. Can see it. So this was the trade I did. You can see that I called the trade. I took it on my FUNDEDNEXT account. All right. So let me just explain the trade before, just for you guys to understand. Now look at this trade very carefully. It's a very, very simple trade. Very, very simple trade. Very simple. Right. Now, how did I catch this trade? Look at Asian liquidity here. So that is Asian liquidity here, right? This high was Asian. This high was also Asian. So what happened there? Market dropped down, blew out this liquidity, took out the previous daily. It took out the previous daily low as well. So we took out Friday. Look at Friday's low here. So we took out Friday's low here. So we took out Friday's low, right? That was the previous week's low. We took out Friday's low, and then we dropped down. So now we had what? A bullish break. So where's the bullish break here? We took out what? This structural high. So we had a bullish was break of structure, right? And then we had this Asian liquidity here. We had this liquidity here. We also had this liquidity. So I was targeting this high as my target. So what did I do? I simply did what? Drop my fib level. Number one, remember that we took out liquidity, which means that we are going to likely what? Reverse. And then we had what? A bullish break. So that bullish break was, okay, I saw a bullish break of structure. That means we might what? Reverse. So I simply did what? I took out my Fibonacci 2, plotted it from here to this point. Then I put my limit at what? This 62% fib level. And so I simply just put it here. I put my limit at the 60% fib level. You can check my Twitter page. I call this trade. You can check my Twitter page where I posted it. Right? You can see I put my Fibonacci level here. Right? My limits at that point there. And I was targeting what? This. You can see. Can you see how minus 0.27 was very close to this liquidity point here? Can you see that we were very close? Minus 0.27 was just very close to this high. So this high was my target. This high was actually my target. So you can see how I got a very easy trade there. By limit at what? The 60% level, just at this 60% level. Can you see how it came precisely? Look at this. Very beautiful. Look at this sharp reaction there. You can probably just clear very quickly, like immediately it ran away, right? So market came, hit my 2% level, and then it ran for my take profits. Very simple trade. No, there's no ambiguity to this. Very simple trading strategy. We blew out liquidity. We had a break of structure to the upside, and then we had what? Liquidity. So if you understand this concept, just type I understand. I understand. Just type it in the comment section. I understand. I understand. I understand. I understand. So I want to give you guys an assignment where I'll be giving you guys a gift. So on your, this is the assignment for you guys. On your demo account, right? Identify a Ict Ote entry real time. So I'll give you a gift for this. What I mean by real time simply means that you have to identify it before it plays out. So take a screenshot before it plays out on your demo account, not real account. Remember what I said? I said on your demo, right? I'm not asking you to trade live. I said on your demo account, go to your chart and identify it. Put your limits on your demo account and then see if it plays out. Take a screenshot. So two things to do there. Once you get your entry, you take a screenshot before you enter the trade, right? So take a screenshot before you enter and then a screenshot after it has played out. So just identify it, take a screenshot before it plays out and take another screenshot after it has played out on your what? Demo account, right? I didn't ask you to trade live. I want to trade this thing with your demo account today. After seeing this video, go and demo trade it. Identify this thing, structure, liquidity, fib levels, and then trade it on what? Your demo account. Remember, I said demo. I did not say real life, right? I'm never going to ask anyone to trade live once. I said demo account. All right. So have a wonderful day. See you guys in tomorrow's teaching. Cheers and God bless.